Hi everybody, welcome to another episode of Stock Talk. My name is Aman and I am an investment coach and founder of Sage Investors. And as an investment coach, what I do is I help people, new investors or experienced investors who want to be financially secure but are feeling kind of totally confused or intimidated by the whole investing concept, the whole concept of figuring out what stocks and ETFs to buy and sell. And also feeling kind of frustrated by just not making enough traction in growing their own savings. So what I do as an investment coach is I teach people. I mentor people on how they can make more informed, more educated, and ultimately more successful investment decisions, so they can improve their chances of achieving some level of financial freedom. So that's kind of what I do. So this is Stock Talk. This is my little podcast that I had to have going on here. I've had this going on for a while, where I like to talk about all different kinds of things related to investing, things that observations, anecdotes out there that I see out in the market that could have some element of influencing how I make investment decisions, and also to share with you how I go about making my investment decisions, because it's one thing for me to teach people how to invest, it's another thing to model the behavior. So I like to share some of that with you through this podcast. So this is episode 73, and today I'm going to talk a little bit about the whole concept of advisors, financial advisors, and reason why. And I'm not talking from the traditional sense of a person who says that they're a financial advisor working in a bank or a financial planner. There's that element too, but there's also another layer of advisory kind of services out there. You could have people in a bank, a fund company or trust company who are just bank tellers and stuff like that, who are also in a way kind of selling you and are advising you on what you should be doing with your money. And the reason I want to talk about it is there's been a bit of an uproar up here in Canada, also in the US, around this whole concept of upselling, where especially up here in Canada, there's a lot of ex-employees now kind of out there talking about how much pressure they were put under by their managers, by just management as a whole, to increase sales, meet sales goals, meet sales targets, and just the constant pressure to upsell customers, whether it's at a bank teller, at the teller, or it's somebody just coming asking a question about a mortgage and then getting upsold to buy a bunch of GICs or mutual funds. Just the underlying pressure that the industry puts on its employees to sell product. The reality is, banks, they're businesses. They're there to make money, and they have pressures, Wall Street pressures, Bay Street pressures to improve earnings. So there's a lot of pressure to increase sales. And it's also happening, I'm talking about what's happening here in Canada, but also in the US. We had that whole Wells Fargo thing, where employees were under so much pressure to just set up accounts for customers without them even knowing about it, just forcing them to get into products where maybe they had no business being involved in them. So there's a lot of the microscope is really solidly on the financial services industry right now in terms of how they conduct their business practices with their customers. And so I really want to talk about it. And one of the things that's really, despite all this stuff that's going on, the reality is they're not going away. Banks aren't going away. This whole concept of upselling might be rebranded in a different format, but it's not going away. And so what I want to talk about is what I do. One of the things I do as an investment coach is I coach people on how to deal with banks. I coach people on how to work with a financial advisor or a financial planner, how to evaluate one to see if that's somebody that they might want to work with, somebody who's going to be working, looking out for them and have their interests at heart. So what I want to share with you today is just give you some tips, some guidelines, I guess, in a sense, some things you may want to do if you're considering working with a financial advisor, or you're considering whether it's a private one or a fee for service one or a commission-based one. There's all kinds of them out there. I don't want to get into that kind of today. Today I want to talk a little bit about action items and strategies that you should keep in the back of your mind when you're going to communicate and interact with the financial services industry, to ensure that you get what you need to get out of it, because that's ultimately what this is all about. You're engaging in trying to control your financial destiny. You have financial goals. You want to achieve them, and you want to work with people that are going to help you achieve them and are going to put you into products and services that are going to enable you to reach your goals and enable you to achieve that certain level of financial freedom. So I want to share with you a few tips that I share with my customers or my clients that I work with, that I coach with, to help them and hopefully help you have a better relationship and have a better outcome with how you interact with the financial services industry. Now, the first thing I'm focusing mostly on how I'm dealing with like your traditional financial advisor, financial planner. Now, as I said, a lot of things that's happening now, the job titles and the sales techniques are very, and so I want to just to kind of put a dividing line here between that, which is what I'm going to talk about, and let's say you're going, the common scenario we see a lot more now is when we go up to a bank teller and just want to deposit some money and we're getting sold to buy some insurance or a mutual fund or a GIC. The approach when you deal with that kind of situation is very simple. It's basically saying thank you, no thank you, and just moving on. Because the last thing I wouldn't want people to do is just to start berating people, because you have to understand these people they're not the ones initiating this. They're being told, these tellers and these frontline office people, bank people you're going to meet at the bank, they're just being told what to do. It's not them, and they don't deserve to be lashed out at. So that's something I really feel strongly about is these are hardworking people. They're just doing what they're supposed, what they're being told to do, and they're just following orders. So don't lash out at them. Just be really nice, very polite, and say, thank you for offering. I'm not really interested in that right now, and just leave it. If they continue to push you on it, just repeat it again. Say, thank you very much. I'm just not really interested in it right now. Maybe another time, and just move on. So that's really one strategy when you're dealing with that kind of upsell that's in your face kind of situation. That's one thing. But now I want to talk about, building that relationship or just dealing with a typical financial advisor, financial planner, how that relationship should evolve. Now, first thing you do, and it's going to sound really weird in a sense of it, is if you're going to go meet with a financial advisor or a financial planner, you're going to go to a bank, just dress up a little bit. It sounds like really, dumb. It sounds really stupid. Like, why the hell am I dressed up? Like, ultimately, when you're going into a meeting with these type of people, it's a business meeting, and you need to project that you are know what you're talking about. Know what you want to project an image that you care about what this meeting is going to be about. And so it's really important to have, just to not, I'm not saying go out there and wearing what you wore for the prom and wear a tuxedo or a full-on suit or a blouse, blazer, all that formalized stuff. It's just don't dress like in flip-flops and a t-shirt and torn off jeans and just show up there and say, hey, like what's going on? Take it seriously. This is about you. This is about your future. This is about your money and making sure it's being managed or decisions are being made that are help to grow that money. So take that seriously. Another thing that's important when you go to a meeting, also, I tell people, tell people I work with to do that, is bring something with them to write on. We live in a tablet world now, phones. Okay, bring some phone with some way that you can take notes about what's going on in the meeting, because you're not going to remember everything that's going to go on in the meeting. Just bring something to write down. I also believe very much in the concept of preparation. Like, just don't say, oh, I'm just going to go see this advisor and just talk about whatever. Actually have a plan for when you go into that meeting. What do you want to accomplish with this meeting? What's the point? Be able to write some questions down. And that's another thing why it's important to have something written down, is because as somebody's talking to you about stuff, you can just sketch out some questions and come back with some more detailed questions. Come in with an agenda. Understand what you want to achieve. Like, why am I coming here to talk to this advisor? There's 5 million other things I'd rather be doing. I'm here to talk to this advisor. What do I hope to accomplish from this meeting? What do I hope to accomplish from this relationship? Have that down. Understand a little bit more what your goals are. Again, even if you have to write out your goals, go for it. Like, just do that so you have something there as a reference and something you can tap into in your conversation. A lot of times, especially if you're going to meet with a new advisor, they're going to hit you with questionnaires. They're going to want to know a little bit about you. You know what? If it's possible, like, go to the company's website, and if they have some kind of questionnaire kind of thing there, fill it out ahead of time, and then bring it in. Say, oh yeah, by the way, I fill it. What you want to do is you want to project an image that you're prepared, that you feel like an element of confidence, not arrogance, confidence, and an element of motivation that you're committed to doing this, that you're not just doing it here just for the sake of doing it. You're here because you want to take action on some things. And when people see that, when an advisor sees that, the conversation is going to be a heck of a lot different. Because if you go in with a laissez-faire attitude, say, yeah, no, I'm here, I know I should be investing, show me what you got. To them, that's just blood. And they're just gonna sell you and sell you and sell you. If you come in there with a plan and you show them what your goals are and you're articulate with it and you're prepared and you present that image and you project that image, they're gonna say, whoa, okay, I don't think I can sell this person. I'm gonna have to just, I'm not gonna pull all the garbage out. I'm gonna have to have my A game. And that's really what it counts to. So the preparation side of it is pretty damn important. And it's something I really instill with people if they continue to want to go and work with an advisor, or even if they're working with an advisor already. That's quite common too. I've coached people who want, who are working with an advisor and they do stuff with them and they come back to me and say, hey, what do you think about this? So these are, I find these are really important elements. The next thing you want to do is when you actually get into the meeting is it's about asking questions. And I think one of the things we fail to do, and one of the things that we fail to do as investors, is we fail to ask questions. And I think a lot of it is because maybe we just don't know what questions we want to ask. Again, it's that education piece, that literacy piece. We're not comfortable with, if we want to talk about ETFs, I don't know much about ETFs. I know I should be investing in them or something, but I don't know what they are. And so it's hard to ask maybe meaningful questions, and you just want to come and say, I don't want to look like an idiot that I have no idea what I'm talking about. It's critical that we ask questions, because when you ask questions, you put accountability on people because they have to give you answers. I don't know is not really that acceptable. I don't know, let me talk to somebody and get back to you is an acceptable answer. Because a lot of times, a lot of the people that you're going to be dealing with from an advisory perspective really, don't have it all together. They may be inexperienced. They just might not have that skill set or education piece. They might have that education piece. So it's really important that we ask a lot of questions. And that's where that preparation side of it is. We can sketch out a few questions, even if it's can you explain to me how this works? Explain to me what an ETF is. I don't really understand. It's okay. It's okay to ask dumb questions. Don't feel like you should be you're going to ask. There's no dumb questions to ask. And a lot of people just get scared of asking questions. I'm the type of person, ask away. This is your money, folks. This is your future, and you need to know that you're going to be doing things that are consistent and aligned with what you want to do and your values and your goals. And so you have to ask questions. So in a typical kind of meeting, a lot of times an advisor is going to present stuff to you. It's going to present you with options, can present you with investment opportunities. And so that's really where you need to start asking questions. So the areas, there's all kinds of questions you can ask, but the areas you definitely need to kind of tick off if you're being presented with an investment opportunity is, first of all, ask the advisor, explain it. What is it? What is it all about? What's the history of it? What's the point of it? What's the goal of this? What's the performance of this? Does it make money? Does it have a demonstrated track record of making money? If so, show me. Show me the numbers. Show me the work. That's one side of it. Second question you may want to ask, costs. How much is it going to cost me to get into this investment? How much is your cost? How much is your cut of this product? If I decide to purchase this product, what's your take on it? What's your cut of this? Costs are critical important. It's one of the key disciplines with personal finance is key. As much as we want to grow our savings, we want to minimize our costs or minimize our control our costs. So we need to always be asking about questions. And a lot of times, advisors just don't want to go there. And they'll say, well, it's a big whole process. I can go. Ask them to put it on paper. Show us what the breakdown of those costs are. And so that's one element. Third thing you may want to ask is, why should I be, tell me why I should be interested. Why should I consider this product? Besides the fact, oh yeah, you're going to make a lot of money. Why? How does this align with my financial goals that we've talked about already? How is this consistent with it? Ask them those questions. And then finally, really one of the key critical questions you need to ask your advisor is, what's the risk profile of this thing? How risky is this? What is the probability that I could lose all my money if I invest in this product? And a lot of times, and it's interesting, up here in Canada, they did an undercover secret camera thing where they dressed up a bunch of people put on the camera, went into a financial planning office and to talk about some investments and stuff like that. And the advisor would come in there and say, oh, there's this great product here. It's this great, you can't miss, guaranteed, you're going to guarantee 10% every year. And it's going to cost you, the costs are so limited and it's slam dunk. There's like no risk to it. If somebody comes in and presents that, you need to just stop it right there and say, okay, show me. You need to ask, what about risk? And because a lot of these advisors will not even go there with that whole concept of risk. Risk is another area you need to understand, and you need to understand what you're getting into. What is the probability that I could lose some or all of my money if I invest in this product? So to summarize again, if you're getting presented with an investment opportunity by an advisor, ask them to explain it, give them the background, give you the background of what it's about, why it's good, why it's consistent with your financial goals, how much is it going to cost you, and ultimately what are the risks associated with it. And ultimately, is this thing going to make money for me? Does it have a track record of making money? Show me. And if they can't answer these questions, tell them to go find the answers and then come back to me. Come back to you with those answers. They work for you, right? This isn't about them, this is about you. So that's the piece, when you're getting into that conversation, when you're looking at opportunities, strategies, and these things. These are the things you need to have in mind in the back of your head. And that's why it's good to write these out, write these questions, just write the points down, and then just ask away and make notes on it. And if they can't give you the answers right away, say, okay, send me an email, send me a link, just send me the info. Go get the info for me. So that's one element. And the final piece really is how you wrap up your meeting with an advisor. And it shouldn't be, well, okay, thank you, bye. Walk out the door. There needs to be some accountability here. Accountability for you in terms of, you have to make decisions. So you're accountable to make decisions. So there's that piece of it. But the other side is accountability for the advisor in terms of action items. So, okay, we've talked about these investment opportunities. We've talked about this possibility of altering my portfolio to have more exposure to foreign equity. So what are we going to do about it? So what are we going to do next time we meet? What are the deliverables? What are you going to do for me, 2 weeks from now, within 2 weeks? Have some action items. So we review those things. Set some milestones. Say, okay, in a month, let's come back, let's check in again and see where we are. And you said you were going to get me some information on X, Y, and Z on these particular products. Send them off to me. I'll take a look at them. And when we talk on the phone in a month, this is what we're going to talk about. Action items. This is about accountability, putting accountability on the advisor. So when you bring all these elements that I've talked about here, when you're talking about how you present yourself, how you prepare yourself for a meeting, how you conduct the meeting, and how you end the meeting, when you put all these elements together, you get a very much more cohesive and consistent meeting. And ultimately, it's about you and getting the chances of you getting the things that you need out of this meeting are much going to be higher than if you just show up blindly and just say, hey, how you doing? Kick your feet up on the desk, say, hey, what are you going to do for me this week? Because to them, that's just dollar signs. That's just, oh my God, I can sell this person. You don't want to give them that satisfaction. You want them to work for your dollars. If you're going to park money with this company, with this bank, with this advisor, with this broker, there needs to be accountability. And you got to hold them to it. So these are elements. So some people might say, holy crap, Aman, that's like, freak, these are really nice people. Like, why are you being so hard ass on these people? This is your money, for God's sake. And you don't want to lose it, right? So sometimes you have to be a bit of a hard ass. Now, I'm saying you don't have to be a hard ass to do all these things. You can do all these things in a very, very professional, very polite, very cordial, very, non-aggressive kind of way. You can do this. I do it. It's okay. It's it's easily done. And as I said, I've worked with people who continue to work with advisors and, they tell them stuff and sometimes they get this thing, I don't know if I really want to be doing this. And so they'll come to me, and I'll just, as a third party, I don't tell them don't do this, but we have that conversation where we try to figure out, and ultimately it's my client who figures out, okay, you know what, this is dumb. I don't want to go near this. Or this is like, wow, this is actually a good idea. This is a pretty good idea. I think this is consistent with what I want to do. I'm going to go down this route. So really important that you have these elements if you choose to work with an advisor, because again, it's about you. And the reality is they're not going away. And as I said, I'm not trying to demean and say, financial advisors don't know anything. They're just glorified salespeople. There's a lot of wonderful, these are smart people. They've worked hard. They've got a lot of credentials behind them. They've taken, they've undertaken a fair bit amount of formal training. They should know their stuff. But if you come in with some element of literacy and some element of education and some element of preparedness for it, it can be a very lucrative relationship for both you and for the advisor. Also for you from a perspective that advisors are tapped into a network. They have access to all kinds of information that you can tap into. So if you're focused and you know where you want to go, you can use these people. Saying this really nicely, you can use these people to help you get the kind of information you need to make better investment decisions. So thought I want to share this with you. I think it's really important, especially right now. We're just getting the industry is just really under a big microscope now with all the different garbage that's been going on out there that's coming to light. And so I just want to say, you know what? It's there. The banks aren't going away. Financial services companies aren't going away. Financial advisors, brokers, they're not going away. We still have to coexist with them. Here's some ideas and how you can better coexist with them more effectively, so ultimately you get what you need out of it to meet your financial goals. That's all. So that's pretty much all I got for you on this today. Actually, I have an announcement too that I forgot to make. I just didn't realize I didn't make that. One of the things that I do also from time to time is I like to deliver some webinars on a variety of investment topics. It's sort of a goal I have for this year is to do a whole whack of webinars, free webinars, on a variety of investment topics. I've done a couple already this year, one on RSPs and TFSAs. I've done one on finding your investing path if you're just looking to start investing or you're just trying to figure out how to invest, what investing path you may want to go on. There's a variety of ways you can invest, and I shared with you some options there. You can either go do it yourself, or again, hire an advisor to outsource your decision making to somebody else. There's options out there. You can get a computer now or an algorithm to manage your money. So there's paths out there, and that was one webinar. So the next one I'm going to do it, and I'm planning to do it. My date I have scheduled is on May 25th, which is a Thursday, which at 12 noon Eastern. I'm going to be doing a webinar on exchange traded funds, and I call it, I believe, what do I call it? I call it Let's Talk ETFs. And for those of you who are like, what the hell is an ETF? ETFs are slowly becoming really a disruptive force in the financial and in the investing industry in terms of the volume of money that's now kind of going out of traditional mutual funds and managed portfolios into more passive or in more hybrid kind of portfolio baskets of securities like ETFs. It's just, we're seeing an epic generational change in where money is being invested in now. It's not necessarily in individual stocks, it's actually in baskets of companies, baskets of investment securities. So in this webinar I'm doing on the 25th, I'm basically going to walk you through some of the basics of what ETFs are. Like, what are they? How do they work? What's so good about them? What's not so good about them? And how you go about figuring out which ones you want to buy and which ones are going to work for you, which ones are going to be profitable for you. Kind of walk you through that. And also thing which I'm really excited about is actually I want to share with you kind of my own personal investment decision that I went into buying an ETF and walk you through really in kind of a real-time manner how I went around about picking a specific ETF that I was looking to buy and evaluating it and determining if it was worth buying. And so I'm going to share with you kind of my little, kind of a case study in a way of my own personal investment decision in buying an ETF, evaluating it and buying an ETF. So that's on May 25th. It's at 12 noon Eastern time. If you're interested, you can go to my website, www.sageinvestors.ca/ETF. There's a registration form there. All you got to do is put your name, your email, and boom, you're in there. and I'll send you a confirm email with an invitation to invite you to the webinar. And oh yeah, the other thing is seating is limited. I only got spots for 50 people. So basically the first 50 people that sign up, boom, you're in. And everybody else, well, I'm sorry, I can't let everybody in right now. If there's a lot of demand for it, then you know what, I might do it again. I might run another session shortly thereafter. So if you want, just get in there and sign up, and really look forward to having it with you. Look forward to sharing with you some of the insights related to ETFs. It's a big kind of topic right now. It's a big area, investment area, but not too many people really know about it. And so I thought I'd just share with you what it's all about and shed some light into it, and see if it's something that you may want to consider pursuing for your own financial planning and such. So that's all I got for you this week. My name is Aman Reina of Sage Investors. Thank you again for joining me for another edition here of Stock Talk. As I said, all my podcasts and are now on iTunes, so you can get all my past episodes on iTunes. So feel free to go and download, subscribe, leave a comment, leave a review. Be happy to hear about it. If you have any questions about this topic or any other investing topics, more than happy to answer them. Just flip me an email through my website, sageinvestors.ca. Or you can follow me on Twitter. I'm on Twitter all the time, commenting about the markets, sharing my own personal investment decisions that I'm facing in real time. My tag is @sageinvestors, so feel free to check me out on that. So that's all I got for you. I hope you're having a good week, and we'll catch you again another time. Cheers.